What about Shaw Communications, SJR?
What's with the media companies today?
I think people are doing some work on this and finding things they like.
What's SJR?
SJR, yes. Shaw Communications.
Canada. Telecom. One of the biggest providers of internet, television, landline telephone service. So it's kind of like a Spectrum. Is that what it is?
CenturyLink.
Oh.
Say that, Don?
I would say they're closer to CenturyLink.
CenturyLink, okay.
All right, cool. That cool.
Market cap, Paul. It's Paul, right?
Why are you laughing?
I'm not. I'm always laughing.
$8.8 billion. PE of 17.8, so it's a check mark because we want lower than 20. Doesn't mean that makes it great. Trailing 12 months profit margin about 12.5%. Check mark there.
That's good too.
Very high gross margin, over 50%. I like it so far, and a nice little dividend right here.
5.5. I like that too.
What is that? 4.4. Call it 400 and call it $500 million just to be safe. Just to be safe, it's less than $500 million, but we'll call it $500 million just to be safe.
Okay. Pillar number 3 is revenue growth.
We'll go to the financial statements,
Please
annuals, annuals. 3.4, 4.0. Check mark there.
Profit growth is pillar number 4.
The profit. Ooh.
Uh-oh.
920 down to 511. And look at these years. They had a much higher profit that was very consistent. So by the way, guys, if you looked at the company at this point, what would you have thought? You're like, oh, wow, 720, 738, 795, 709, 919, and then collapse city. So just remember that, guys, that everything goes forever. Even if the numbers look good here, you have to understand the future story of the company.
Pillar number 5 is shares outstanding. We want this going down.
480, 515, another X. Okay, so we're striking out over here a little bit.
Okay, current assets over current liabilities is pillar number 6.
Current assets over current liabilities. Current assets are $1 billion. Current liabilities are $1,180,000. So X marks the spot there as well.
Billion.
Yeah, we're striking out here, guys.
3 checks, 3 X's. Pillar number 7 is free cash flow growth for Shaw Communications.
All right, ready? 450 million. Right? I did that right. 800 and 450. And then let's call it 600 million just to be safe. So check mark there, just to be high. It's high. It's like 500 and whatever, but we'll call it 600 million. And then negative 100. 0.
Okay.
And then, oh boy, this is bad. And then 200.
All over. The free cash flow average is 230
What
million.
the heck is going on over here? Guys, so it's currently selling for, they can't even afford their dividend. So that's the first thing.
Yeah, the dividend of 5.4% was $500 million.
Okay, so they can afford it barely, but they owe for the last 4 years, because they've only made, what, $550 million in 4 years in free cash flow. I don't know about this one. This one's kind of tough. First off, the current company is $8.8 billion divided by 230 is 40 times free cash flow, something like that, 30 some times free cash flow. So that's an X. Call it 38, I have no idea. That's an X. Guys, I want to make note of something. This is very important to me. So on Shaw, here's what I want to say. Yesterday I got an email from one of our patrons who sent me, and I guess this happens all the time, they sent me a real estate deal. And I always tell people, if you give me my 7 things I need, here's the list, I'll give you an answer in minutes. He gave me the list, literally 2 minutes later, I had the response to him, as well as the minute explanation as to why I wasn't doing the deal. And he goes, wow, you really were serious about that. It doesn't take much from a 500-foot view to look at a company. Now, going in detail and understanding exactly, but my investment philosophy, what works for me is, I want to see the high level look good, and then I want to go deeper. That's my style. I'm not saying it's the right style for you, but for me, that's what style works for me. You have to find out what works for you. For me, I want to see the high level and go, yeah, as soon as I see 30 times free cash flow, I go, poop. I just go, okay, moving on. Let me find something else. Because all the other numbers didn't make, we had many X's there. We had not enough money to pay the debts. We have a lot of debt going on. What was the other thing, Seth?
Yeah, I mean, for Shaw Communications, their PE was good, their profit was good.
Oh, so their PE was good, but yet their free cash flow was bad. That's a big red flag for me. I don't know why that is.
They have more. They have more liabilities than assets, but they did have the free cash flow is all over the place. So it's
They can't handle a dividend. Basically, it's just. I feel like to me, I'm gonna find a better company. Now, if I go down the road of 100 companies, I don't find one, then from there I start weeding out, okay, what else is there? Let me dig deeper. But I'm a big believer in find the ones that make sense financially and then go dig deeper and pick the best ones out of those. That's the ones that make sense to me. That's my style. I'm not saying it's the right thing for you. That's my style that I kind of preach about. And if it sticks with you, awesome.